Okay guys, and welcome out. This is going to be a presentation on managing stock trades. So what we're going to do during this kind of segment is we're going to talk about how you deal with a position that you're already in. So if you have a stock, whether you're long or short, okay, you still have to make a decision on what to do with it. Now, that being said, let's kind of lay a few ground rules here. Number one, you should already have a general idea of what your rules are. You know, you should have a few variables that go into whether you should take profit, cut losses, and all that kind of stuff, but it very well should be defined. What I want to do during this is kind of teach those different ideas, talk about where to set a stop loss and why, where to set a target and why, how to deal with a position that you're looking at and all that kind of stuff. For the purpose of this video, what we're going to do is we're going to look at Thinkorswim, and I've got just some virtual trades here that I want to kind of just work through and help you understand how to read a statement. You'll notice, and we're going to leave option trades off for right now. I'll get to covered calls maybe in a different segment, naked puts, that kind of thing, but we're going to start with just swing trades on stock. Couple of major little bits of information you've got to figure out. Number one, how many shares do you have? Let's start with ALK. Now what you're looking at here is the monitor tab at Thinkorswim. I've got mine laid out. I've done a custom layout here. There's quite a few videos in the YouTube page on how to do that, how to build your monitor tab the right way. If you need some training on that, go find that. You'll notice Alaska Air Group, okay, ALK. Now, as I'm reading from left to right, there's several things I need to understand. Number one, the quantity. Okay, I have 1,000 shares at $58 a share. That means that the BP effect in a margin account is $29,000. Why? Well, 1,000 times 58 would have been 58,000, but the margin is cut in half. So let's first identify the total value. Okay, so key bits of information. So when you're reading the monitor tab, you have the instrument. Go through this one column at a time, make sure we understand what we're looking at. The quantity, the days, the mark change, days, mark change. Now, the difference between mark and mark change really comes down to simple idea. What is the current price versus what did it move from one day to the other? We'll go through that here in just a minute. The percent change. The trade price. And I might have to... Now that was a column, that is not a defaulted column, that is one that I added in there. So if you want that and don't have it, I'll show you how to add that. The PL open, the PL day, and the BP effect. PL open, PL day, and BP effect. And let me reduce this down so they all fit. Yeah, let's try 20. There we go. Okay. So let's deal with these one at a time. Okay. So the instrument, the quantity, the days, the mark. The mark change. The percent change. The trade price, the PL open, the PL day, and the BP effect. Now one thing that's good to do, and I do this sometimes with new students when they're in my office for mentorship and things like that, is I'll literally take a pen and a pad and I'll say, okay, we're gonna build these out. We're gonna make sure that you can find and locate the information. Because if you're going to make a decision on a trade, you kind of have to first know what you have. If you can't read the basics of what you have, you're going to have trouble. Okay, you're going to have trouble. So why don't we start with these one at a time? ALK. ALK is Alaska Air. So if I'm putting this in here, Alaska Air, ALK. The quantity is 1,000. Okay. Now, 1,000 shares. Should I have done 1,000 shares? Should you do 1,000 shares? It all just depends on what you're doing. You have to know your money management rules for your portfolio. If you don't already have that design, then you should probably be in virtual until you figure it out. There's two different components that determine quantity. I would say the total risk of what you would lose if you're wrong, as well as the total position size. Generally, what we look at is anywhere between 1 and 10% of your trading capital that you could put into a position. I've seen some traders get as aggressive as 20%. Now there's two concepts. There's two minds on this. What are you risking or versus what you're spending? Risk is more important than spent. Okay, you can spend more if you can control the risk. Now you can only control the risk through a put option or a stop loss or some assumed management style, something that you have to be able to prove that you can control the risk. But the quantity here is 1,000. Now the mark price on this one, if we're looking at that in Thinkorswim, it's right here. It says 58.54. That means every one of the shares is costing 58.54 today. That doesn't mean that's what I paid for it in this particular trade. In fact, I paid 66.41, which is why the trade is losing money. Let's go look at so 58.54 down 9 cents. Negative 0.09. The percent change is just like it describes. Now the negative 0.09 means that today it dropped 9 cents a share. Okay, not a big move down, but it was down. So the negative 0.09, that's how far it moved during that particular trading day that you're looking at it. Negative 0.15% is not a big thing. For an individual stock, I would say if it doesn't move more than 1 or 2%, you don't really have a big day. So when you're trying to gauge scale, on any old given day in the market, a stock like ALK can move 1 or 2%. It doesn't even have to really be anything significant. So just make sure you understand that movement does happen in the market. Get a feel for what the average movement is so you know whether it was a big day or a small day. The trade price on this one was 66.41. The PL open, this one is down, negative 7,870. Now you'll notice in parentheses here, the PL open, when it's in parentheses, that means you're losing money on that trade. So you have to kind of pay attention to that. PL day is negative 90, and the BP effect is 29,270. Now, if this were not a margin account, the BP effect would have been double because ALK, and I'll just grab a calculator here. If we just took the basic math in the trade, ALK, if you do 1,000 shares at 58.54 a share, well, that's 58,540. Obviously, the reason why it's cut in half, divide that by 2, you have a margin account, 29,270. That's why these numbers come in the way they are. When you're trading stock, the margin gives you access to trading the same amount of shares for half the price. So that's a big advantage when you're a trader. That's what a lot of people are looking for. Now, let's talk about the management to this trade, because one thing I did intentionally before I started this presentation is I killed all the orders. Okay, I got rid of every order that there was on those trades and made sure there was nothing there so I could show you how to build them in. Every trade should have one of two things defined, probably both. You need to know, because we've already made our entry. Now, remember, these are trades that we're already in. You need to know set, okay? Stop, entry, and target. The entry was your trigger point. Now that one we already got in. So entry is your technical trigger to buy or sell short. Now that's for a stock trade. Now that's where you know there's a lot of different reasons why you buy or sell. You need to have that defined, whether it's price action on a candlestick, specific pattern. That's an entire probably advanced course to go through, a master's type program. master traders, something like that, where you're going to spend a good 2 months trying to master and perfect the entry point. There are simple entries. You can buy on an MA crossover, and that can work. You can buy on price action. That can work if you understand how to read the chart really well. You can confirm it with a bunch of technical indicators. I've been in the market for 11 years, and I got to tell you, simpler the better, when it comes to entry points. You got to be able to look for the trend, work with the primary trend, find a trigger, make your entry, go from there. Bullish retracements, bullish breakouts, all those basic kind of things. Now remember, if you're a new trader and you don't know where to get in, you can always use like a stock report or something from a trusted source like Tackle Trading or a mentor to help you find a few entry points to learn from and that kind of thing. But we're already in this one, so let's now deal with the stop loss and the target. Now, and this is where, as a trader, you have to have some defined things. If it's a swing trade, stop loss should be fairly tight. Okay? If it's a position trade, stop loss should be a little bit more loose. And if it's an investment, stop loss should be quite a bit different. We'll talk about each three of those, stop loss and target for all three of them. So you have to know what kind of trade you've made. Okay? There's a great video called, and just in Tackle Trading in the search, just put in the word identity, and you'll find about an hour presentation on developing a trading identity that would help you out identifying, the swing position, investment style, and all the differences. So stop loss for a swing trade. What we're going to do is we're going to give you a basic rule to help you identify, and I'm going to say 10% of the ATR below the low of the current, if I can fit it all in, the candle. Okay. Stop loss on a swing trade, we're going to say 10% of the ATR below the low of the current candle. That's a good rule. It's a simple rule. We'll go and apply that here in just a minute. Position trade, we're going to say 50% of the ATR below the swing low, also known as support. Okay. And an investment. Now, swing and position trade are done on daily charts. Okay. Daily charts. So when we're talking swing and position, we're talking the daily chart. We're not talking an intra or a long-term chart. We're not talking a weekly chart or anything like that. We're talking daily charts. Whereas an investment, you're most likely going to analyze it on a weekly chart. Okay, on a weekly chart. And on a weekly chart with the investment, we're going to use a put option. One contract equals 100 shares for every 100 shares. 6 months at a 25 delta. Okay, that's a good rule for kind of an investor's type mindset. Now, if you're an investor and you want to have a stop loss, you could use the position style just off the weekly chart and do that as well. But the put option can be used as a replacement to the stop loss. It's a mindset thing. Now, targeting. Okay, this is targeting down here. As a swing trader, you have many choices. I'm going to give you a simple one. Okay, if you're going to go below the low of the candle, let's set a target at 2 ATR from the trigger. As a position trader, I want you to do a pay analysis that shows you where to set your target based off of previous potential average yield analysis. It's a concept that we'll cover here in a minute. As an investment, there's no target. Okay, there is no target. You don't need a target for an investment because you're holding on to it with the presumption you'll hold on to it for a long time. You're going to play it by ear a little bit, managing your investment with active participation in the market, knowing what you're doing. But think about it, as long as it's working, if you're an investor, you're going to hold on to it. If you've got your risk under control, you want to leave that open-ended target. So there's that's one of the different mindsets there. Okay. Trade management, some basic rules. So now we got to figure out what we're doing. Well, let's take a look at this. ALK, Alaska Air Group. From the monitor tab, you'll see ALK right here in the chart. I type in ALK. I could have also used the drop down, gone to positions and found it from here. I could have also used the watch list on the left, pulled up the current account positions right here. Put a bunch of stuff in here and found ALK from here. As long as the linking system is set up correctly, then you can just click it and it would bring it in. We'll be using all of those different things. Wow, that's not good stock. Look at that. It's been going down. You know, ALK looks to be a position that when this one was built, it was on the 8th of June. So here's an example why you always have to have a stop loss and a target. This one was designed here in a virtual account. It was left alone to its own devices, and when the market dropped, this thing dropped. Man, you get hurt if you don't have a plan. From 65 all the way down to 58. That's a $7 drop. We could have avoided a lot of it, but like they say, like my, Lao Tzu once said that if you're living in the future, you're anxious. If you're living in the past, you're depressed. Live in the moment. We can't go back and change what should have happened. When you're managing an account, always deal with the market in front of you. So here we are at 58.54. We got to make a decision from here. What are we going to do? Stock's bearish. We're going to get out. Okay, we're not even going to come up with a trading plan. Remember, the trading plan idea is based on the idea that you want to be in the trade. If you ever look at a chart and you ask yourself, is this even a good stock to be owning right now? Well, it's in a downtrend. It looks like it's dropping over time. It's not a good one to stay in. It was going to pop up here. There was a reason to play that double bottom back then. But now that it's kind of fallen out of favor, you've got falling moving averages. We're not gonna try to fix a bad deal. We're just gonna get out of a bad deal, so we're going to exit. So when you want to dump and you want to get out, you need to right click on the position from the tab. You create a closing order and you sell it back. This is where you have many choices. Okay. Now reading from left to right, stock, sell. 1,000 shares, ALK. Stock, you've got the limit price right here. Change it to GTC. Lock it in and send it as is right there. We can negotiate a price, which is what we probably should do. This is after hours in the evening, so the bid and the ask has really opened up. 56 by 64. If I don't move my price at all, I'm not asking for what the current price in the market was. See, at the end of the day today, it traded at 58.54. If I accept the price stated in my order here, I'm giving up $2.54. That's a lot. So what I'm going to do is double click on that, delete out what's there, put in 58.50. Say, you know what, I'll get out for today's price, but I'm not going to just take $56. Go ahead and confirm and send, push that through, and we'd have to come back and double check that during market hours. Now, just like a checklist, and the way that I always manage accounts when I'm going through them is I go through it one at a time. ALK is done. Earnings is out here on the 21st. Don't have to do anything with that right now. Still got about 15 days until then. We're just going to try to get out tomorrow and move on. AMD, Advanced Micro Devices. Now, let's get our little management sheet here. You would be doing this on a piece of paper probably, or a spreadsheet you could build easily for trade management. Depends on how well you work with one or the other. Okay, so AMD, this one is 1,250 shares. There are 0 days left because it's not an option. You won't have days if it's not an option. Okay, the mark price is 5.03. The mark change is positive 0.07. And the percent change was 1.61%. That's a pretty good day right there for that stock. Trade price was 4.22. The PL open is 1,012. The PL day was 87, positive. And the BP effect was, and you'll look at this right here, see it says 3,143, 31.43. Okay, let's go take a look at this one and kind of make a decision, position, swing, or whatnot. Here's AMD, or actually we have ALK. Now this is a good example where you always got to double check your symbol. I'm going to open up here. I'm going to find AMD, click it, it will bring it in. There's a beautiful uptrend. Okay. Now, in an uptrend like that, when you're going to hold on and try to catch the trend, that is more of a position style trade. Swing trade essentially comes down to this. I want to get paid this week or next week. Okay. Position trade is I want to hold it for this month or next month. So it's a time frame thing. Swing traders, they're quick hitters. They want to get in and out of the market. They want to put their money in and within a few days take the money out. Position trader wants to put their money in with the intention of taking it out, but maybe they're not as actively engaged in the market on an hour by hour or 2 or 3 times a day basis, and so they don't want to swing trade. And just different mindsets. By the way, you can swing trade once a day. I shouldn't have said it like that a minute ago. But you'd have to be very good at order execution. So why don't we just pick the position trade for here? So the first one is the stop loss, 50% of the ATR below the swing low. Okay, so for a position trade, let's take AMD, and we're going to set a position trade stop loss and target. Okay, so we're going to use those design rules I was talking about. So 50% of the ATR below the swing low, so what do we need to know? Well, we need to know the ATR. We need to know the swing low. Okay, for us to be able to make that decision, you know, we can't do the calculation if we don't have those 2 bits of information. Now make a note in your notes that when I say ATR, I'm assuming, unless otherwise noted, using the daily chart ATR. So up here we're on a daily chart. If you were on a 15-minute or a weekly, that would change the calculation. So you need a daily chart ATR. The daily chart ATR is 0.28. So putting my rules in here, 0.28, and the swing low is this location here. Now again, during this presentation, I'm assuming you have the basics of charting down. If not, maybe the first time you're hearing it, a lot of these terms are going to be new. I'd say this is intermediate level and above. You have to know kind of what a trade is and what a chart is. If not, you're going to go back to other content to learn that first. Master Trader first. We're dealing with management. So the swing low here is this pivot point right here where it was dropping and bounced. Okay, the low of that candle is 4.65. I'm looking at the L right here. When I put my mouse on the candle, it tells me L 4.65. I'm going to draw a box right here. I'm going to even change the color of it, show it to you. Okay. So again, L 4.65. L is for low. ATR 0.28. Okay, 4.65. So if I take 50% of the ATR, and the rule is 50% of ATR below swing low. Okay. So when we're doing that, we'd take 4.65 minus 0.1, or excuse me, 0.14 equals 4.51. Now here's a general mindset thing, kind of a little tip, little pro tip here. Don't create an order until you have your numbers. If you don't have your numbers, there's no reason to click the order button yet. You have to do your calculation first. This number right here is going to be my stop loss. That is what we're going to put in. Okay? There's no reason for me to go create the stop loss order until I've already done that calculation. Just kind of a way of thinking about it. Let's go ahead and go through this next through the target. Then we're going to do, and we're going to use a position style trade here. We're going to use a pay analysis. Now, pay by definition is this, okay? In a trend, I want you to take the first range, which means from low to high of the swing moves. Okay, so the first range and the second range, add them together and divide it by 2. This was a concept taught to me by my mentor years ago, actually. One of the guys who taught me technical analysis. His name's Jeff Crystal. Wonderful trader, wonderful, even a better person, actually. And he taught me a lot about charting. You know, I owe him a lot. You know, I think that you always got to show gratitude when you can. I try to do that myself. So, Jeff, if you ever watch this, if for whatever reason you're bored one day and you're watching me do technical analysis, just want to give you credit where credit is due on that. Jeff was looking at charting, and he said, Tim, you know, what do you see? He was teaching me a concept. I said, well, that one moves up a little bit. That one moves up. They move up about the same amount. He says, yeah, that's what pay is. You're taking the range. You're taking one range, you know, say that's like an $8 move or whatever it is, and you're taking the second range, say it's a $10 move. You're adding them together. 8 plus 10 equals 18. Divide them by 2. And that's your $9 target. Okay. Now to set the pay, you don't take it from the current price. You've got to find the swing low. You add pay, and that will get you your target. So let's go do this with AMD. If we're looking at AMD, the swing low is the same number, 4.65. The pay expectation, well, you got this range, and to be a swing range, it's got to be more than 2 candles in the same direction. So we're kind of looking at this range as well. From 350 to 470 is $1.20. 420 to 550 is $1.30. So in this example, for AMD, it would have been, I've already forgot, 350 to 470, 120. Better get a pen and pad here. 420 to 550 roughly is about $1.30. So $1.20, $1.20. Let's call it $1.20. Oh goodness, sometimes, you know, I tell you, 120 plus 120 equals 240 divided by 2. Now this one would be easy, and that equals 1.2. Now that's AMD. Now if you decided one would be 130 or 110 or whatever the range is, that math you would do on your own. It's not that big a deal, quite frankly, to have a penny or two different. The idea is to come up with some kind of rational estimate, some kind of logical way to estimate the target. Now the swing low on this one is 465. Okay, so in this example, let's change the color here. What we need to do is take 4.65 and we would add 120, and that would give us a target price of 5.85. Now all of that was to be able to do this number right here. That's it, is to come up with that number right there. So now we have our numbers. To set up a trade, you need to have your stop, okay, and your target. You need to have both numbers decided before you ever do the order. In our order, this time, so I don't forget, I'm going to actually grab a pen here. In our order on this one, our target price is 5.85. And our stop loss price is 4.51. Okay, 4.51 and 5.85. So from the trade tab, from the, I should say the monitor tab, right click, not a left click, right click. If you're a Mac user, that's a command click. Create a closing order, and you want to use the OCO bracket. OCO bracket means one cancels the other. Okay, you bring this order form up, Now your target will be your limit price, 5.85. Make that good until canceled. Your stop loss will be your stop price, 4.51. Make it good until canceled, and then here is our order. Now, the reason we do it from the monitor tab and things that you should double check, okay, make sure that you're selling the same stock that you just analyzed. I've seen people make that mistake. It's called a rookie mistake. It's okay to be a rookie, but do it in paper if you're a rookie. So the second thing is the quantity. Make sure that you're selling the same amount of quantity that you own. Okay, if you sold 2,000 shares instead and we only own 1,250, well, then you're going to be short the stock when you get to your target or stop. If you didn't want to do that, and that's a mistake. Make sure that your trade duration, time in force, is what you want. Do you want a day order? Do you want good till canceled? What is it that you're going to be building? That kind of stuff. Then when you're ready, go ahead and confirm and send. And send. And if it's a stock trade, what you're going to see is these little bubbles on top of the chart for AMD. And down here, you're going to see it now. Right now, it'll be under unallocated. There we are. It has the sell order. You can locate it from here as well. Okay. All right, next. All right, let's go on to Activision. Activision Blizzard. Let's get our little dealio here. ATVI. This one is 1,000 shares. Okay. Obviously, days are 0 again. We don't have any days left. Mark is 40.51. That means at $40.51 per share today. It was up 0.36 today. That percent change is positive 0.90%. You know, less than 1%. It's a good day, but not a big day by any stretch. Trade price was 37.88. PL open was 26.30, and the PL day was 360. That's because it was up that day. BP effect 20,255. So, looking at ATVI, and let's kind of think about it, you're more positioned like ALK. You know, one thing that's really clear right now in this account is that the BP effect is not consistent. In a virtual account, sometimes this can happen, especially the way I use my virtual account. Essentially, I just put trades in when I'm teaching a class, so I don't have to think about it, you know. I use it to back test, I use it to study, I use it to kind of practice things, but it's kind of just a throwaway almost a little bit when you've been trading as long as I have. And so this isn't the way that you would want to design it. I would say if I was looking at this and it was somebody else's account and I was putting my mentor hat on, I'd say, why do you got 3,000 in AMD but and 20 grand in Activision? You know, you gotta button that up and make it more consistent. There needs to be a design as to why. And that's part of position sizing. That's the phrase that you'll hear, position sizing. But let's deal with it as we have it. We have to make a decision. Do we want a swinger position trade? And that's where your rules come in. I come in here, either open it up and click on ATVI here. If you're linked in, it will automatically bring it in. I gotta tell you, I've seen new traders make that mistake. They'll do all their analysis assuming they're looking at a stock, and they're not. You know, they'll be thinking, man, I don't know what I'm looking at here. They might even be looking at the wrong symbol or something. So double check that. Make sure you're looking at the right stock. And then it comes down to some basics of analysis. Number one, the trend. It's a beautiful uptrend. Okay, green candles going up, red coming down, price corrections as it's in an uptrend. In the uptrend, beautiful breakout. Love it. I mean, really, really good breakout right here. Gotta love these last candlesticks. These are above volatility candles. This one's a big one. In fact, if you look at the size of them, there are a few other ones about that size, but some of the bigger candles were just in the last few days. Not a great red candle here 3 days ago, but it didn't really trigger into two in a row. You're holding the breakout, showing a lot of strength. This is a prime candidate for a position trade. Now, for the purpose of our analysis tonight, we are not doing any investments, okay? All of these we're assuming we're trading, because if you're watching this trying to figure out how to manage your stocks, you're probably a trader, right? So think about it as a trader. This one will be a position trade, and we're going to use 50% of the ATR below the swing low and our pay analysis. So, well, what do we need? Well, we need to write these down. Okay, let's do this one right from the chart instead of a whiteboard. Okay, let's look at previous breakouts. Breakout pay is a little different than swing pay. If you look at this kind of this is a good breakout right here. I'm gonna color code these baby blue. And previous breakouts, good breakout in here. Make that one baby blue. So when it breaks out, how far does it run? That's kind of the thing you're asking. The low here is 32.50. The high here is 35.50. So that's 3. Instead of going to a different screen, I'm going to stay right here. And I'm going to say from a text note, I'm going to put down $3. $3 breakout. $3 break right there. Okay. This one broke at 35.50. I'm watching my bubble over here, by the way. And it ran to about 39.50. So this one was a $4 break. So if they break 3 and 4, well, let's call it 350. So from here, our breakout occurred right at $40. That was the breakout point. Okay, I'm going to click that. If we add 3.5, we're going to target 43.50. And that will be a sell limit is what we need to make that a target. Okay. Swing low happens here at 36. Half of the ATR is 54 cents. So 36 minus 0.54 equals 35.46. Now, here's the problem with that. It's too much cushion. We don't like the relationship. From where we are now, we'd be if we put our stop loss all the way down here, we're taking way too much risk. And so even though this is the swing low, you have a new presumed swing low when you have a breakout. And it's an advanced concept, but I'm not afraid of them. Try to teach you. The break point is actually where we're going to take our stop loss from. See, if we've got a big enough of a target, we could put our stop loss down at 35.46. But as a trader, okay, we can't take more risk than our reward potential. We have to button that up. So what we need to do is we need to come up here, and instead of taking it from 36, we're going to subtract it from 40 minus 0.54. We're going to put our stop loss in at 39.46, and that's our sell stop. Now remember what I said earlier is when you are managing your position, before you ever create the order, you should know your numbers. So now we do. Okay, our sell limit's 43.50 and our sell stop is 39.46. Okay. So then from our monitor tab, we find Activision, create the closing order with an OCO bracket. Okay. Target at 43.50. Make this one good till canceled. Stop loss at 39.46. And good until canceled. Now again, double checking. Got the right symbol for the stock we're trading. Okay. Right quantity for the number we're selling. Very good. And the correct numbers, like my dad always taught me, building houses. Measure twice, cut once, right? Make sure you're good. Time and force is for good till canceled. That means they'll last as long as I don't cancel them. Confirm and send. You need to learn how to read this dialog. For now, we're going to push that through. Double check the chart. You'll see those bubbles. Okay, there's our bubbles. There's our trading plan for Activision. And just like we go through them, we do them one at a time as we're building those out. All right, let's keep going. Coeur d'Alene Mines, here's 1,000 shares. All right, we'll scroll down here. CDE, okay, 1,000 shares. And oh goodness. All right, and then zero quantity. Let's move these prices over. It's $12.19 per share, and we're up 0.79 cents today. That's a big move for a small stock. Oh my goodness, 7% in one day. Okay. First of all, if you can make 7% in a month, you had a damn good month. You make 7% a day. That's a big, big move on that stock. Trade price is at $8.82. PL open is $33.70. PL day $7.90. BPFX $16.95. So why are we doing that part? Well, information gathering. It's a good exercise to have to take something from a digital screen and put it on a piece of paper. Now I'm on a digital screen twice here, or a spreadsheet. But it's just, I've seen this as a mentor. If you're out there and you're thinking, I don't know how to read my statement, build a little table every day. Force yourself to gather the information just as a way to learn and make sure you're finding everything correctly. Now, the other one is this little telephone right here. It tells you when the earnings date is. This one's on 8/2/16. Okay, so I'm going to click that. I'm going to close that. We're good. That's plenty of time. Current date's 7/6, so I think we're okay. We got about a month there. If earnings was coming out, we'd have to do something different. Now let's click in Coeur d'Alene. Let's read the chart. That one is a big one. That one's a big mover. There's a saying in trading. Okay. Bulls make money, bears make money, hogs get slaughtered. Now, that's great. What that means is that you can't just ignore the market. You can play it up, you can play it down, as long as you have a plan and you're good at it and you can execute it. You can have a system. You can have a trading system. Okay. But there's also a saying is that you'll never go broke taking a profit. Okay? And from a mindset standpoint, here's a candidate to take a profit. This one, and I'm not just saying that because it's at a high point. It's because the nature of the trend is to a point where it's overextended. So do we sell the whole thing? If you're new a trader, probably either be in or out. Okay. One thing that we could do as a way to lock in that profit is we could take half of it off and just say I'm going to take 500 of the shares and take the profit on those and then manage the rest of it. That's called scaling out. You'd have to design that into your system. You'd have to know what you're doing. But that's definitely viable here. This would be a candidate for potentially scaling out. Instead of scaling out, though, maybe we'll just set this one up with a pretty tight stop loss saying I'll let it continue to work if it'll work, but I'm going to let it run as long as it will run. Now, I'm going to go back on what I said earlier. I said we're not going to do the investment style stuff tonight. Well, we're going to change one thing. It's not investing, but we're going to use just a stop loss on this one. And I'm going to use a concept called a trailing stop. Okay, trailing stop. A trailing stop essentially goes like this. It's when you use a stop loss order that moves itself. Okay? No Harry Potter magic in that, just moves itself. So as you're looking at the candles, as it goes up, the stop loss will keep going up, 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 up until it has a red candlestick, and then it will take you out. Because what your trailing stop is supposed to do is naturally just stay the same distance below the current price, and even until the price comes down. Think of a ratchet, that only you can turn a bolt in one direction, kind of the same way with a trail stop. So it will move up. If it takes us down, then it will take us out. Trail stop's a good way to keep with a trend, because essentially what we can tell the market, you guys think about this, is as long as Coeur d'Alene is trending and making us good money, let's go ahead and stay in it. But the second it comes down, I want to get out. Makes sense, right? We're going to put a trailing stop at the ATR plus 10%. Okay? And so for a swing trade, we're going to use the ATR plus 10%. Now, what is this ATR thing? ATR stands for average true range. You can add it into your tools up here under the study set. You'll find ATR. Use the default at 14 periods. Okay, it's a tool we use in a lot of our analysis and whatnot. So if the ATR is 59 cents, we're going to add another 6 cents to that and put the stop loss in at 66. Coeur d'Alene. Create a closing order with a stop. Make this say trail stop. Put negative 0.66 in there and make it good until canceled. Now, double check a few things. Quantity, correct. Selling the right stock, correct. Time in force is right. Double check our distance that we're using. And Coeur d'Alene is managed. Fun stuff, right? Now, you should be thinking right now, do I have my rules designed well enough to where I can just go through and apply them? Because if you don't know exactly where and why you're putting your stop and target on, you should be spending your time designing those rules. And there's back testing that can help you, work with a mentor, take a master's class, something like that. But you should know your trading rules before you get into the thick of it. Too many times traders just jump in and start doing it, without really putting the time into designing a good system. Now, it's fine to jump in and do it in paper. It's not fine to jump in and do it in live, okay? Because that's where you'll make mistakes and lose money. The market is not a game. It's not. You treat it like that, you'll not do well probably. The market is serious business. $200 billion a day move in and out of stocks. So make sure you treat it with the respect it deserves and design your rules perfectly so you know what you're going to do. If you're going to use trailing stops, you should have already decided that. When, where, why, what not, all that kind of thing. Now, the longer you trade, there's more variables in that logic tree, obviously, and that's part of what we're doing here today. All right, next, Foot Locker. Now, this is our first short sale. Let's make sure we identify this one. Okay. I'm going to change the color code to red because we sold it short here. Foot Locker. Now, instead of 1,000 shares, if you'll notice this one, the quantity says negative 1,000. It's because we sold a stock we didn't own. Okay, that's what's called a short sale. You can do that in markets. They let you do it. We would make money if it goes down. Now, that's different for a lot of people. If you've never traded before, that might be confusing. Don't worry about that. There are no days, and the mark price, let's take a look here. Current mark price, let's move this in. Mark price 55.85. What's going on there? Foot Locker 55.85. There we are. I have to move that where we want it. Okay, perfect. All right, 55.85. The mark change is positive 0.94. That's great, right? Nope, it's not, because we want it to go down. We didn't want it to go up. Percent change was positive 1.71%. Trade price 54.88. PL open, we're down 970 because it's higher than where we sold it short. PL day, it was down 940 because it went up today. We didn't want it to go up. BP effect on this one is 83K. It's because they put in the credit as well. It can confuse you if you've never traded before. Let's also double check. Let's go to the old layout real quick. In Thinkorswim, there's two layouts. There's a new layout where you can kind of customize all your groupings and do a bunch of different things. I like that. But then if I ever want to just make sure I'm looking at everything right, I'm going to click on the old layout and double check. Now this one has an order. Let's see. No, we're good here. No, Okay. Got it. All right. Just want to make sure I didn't have any options or anything with that as well. So back to the new layout. So negative 1,000, 55, mark change, all that kind of stuff. We got our numbers. Now when you're short sailing, we're not sailing, Tim. Makes me think of that movie with Bill Murray, What About Bob? I'm a sailor, I sail, right? If you've never seen that, please go watch it. Hilarious movie. Maybe I'll check that out on Netflix if it's on there tonight. Here we are in downtrend. Lower low, lower high, lower low, lower high. It looked good, but then it just started going up. Okay. So when you're doing a short sell, your stop loss, and I'm going to draw this as red, is above you. So I'm going to click in red right here. Okay. Your target, where we wanted it to go, was down here, somewhere down here, right? I'm going to make that one green. So if we were going to make money, we don't need the big buttons, we would need it to go down to the green box instead of up to the red box. Well, you can see it's going up towards our resistance. So we need to put a stop loss in. Stop loss has to go at the high, you swing high plus half the ATR. All right. So we're going to put it right here. Stop loss. Swing high plus 50% of the ATR. That's what we're going to use for a position trade. Okay. And our target down here, we're going to do pay. Okay. We're going to do pay. So let's do that right on the chart. Do that right on the chart. Swing high is 56. So let me grab a drawing tool. And let's put some text notes on here. So $56 swing high plus half the ATR is 0.60. Which means we're going to put a buy stop at 56.60. Those are the numbers. Okay. Now target, essentially, this one will drop this far and that far. So this range was from 62 to 54. So I'm going to call that 8. I know I'm doing a little bit of rounding and liberty with the numbers here, but that's part of just going through the exercise. You could be much more specific, I'm sure. I'm going to put in $8. Oh, instead of drawing that, let's get a text note. Okay, $8. This one went from 56 down to 51. Put in $5. So 8 and 5 is 13. Okay. So we're going to call it 6.5, but actually we're probably just going to call it 6 even. So from 56, we're going to target 50. Okay, so we're going to say $50 buy limit target price. Okay, so now we have our two numbers. Now remember what I said. Don't create an order until you know your numbers. Because if you don't know your numbers, what are you clicking buttons for, right? So you need to have your stop and your target figured out before you go and click the order in. So our stop is $56.60 and our target is $50 even. That's based on pay and based on our stop loss rule for a position trade. For a short sell, we're going to right click. We're going to close. When you want to do both at the same time, it's the OCO bracket. Good till canceled, good till canceled. Limit target is 50. Stop loss is 56.60. Okay, that's why I did it from the order form. Now you'll notice a couple things. Because we had sold short, we have to buy back to get out. So that's where our exit orders are going to be a buy. Okay, always the opposite. FL for FL, we did the right stock, same stock. Let's see here. Limit got our right number, double check it. Stop, have our correct number, double check it. Good till canceled, time in force. Same quantity, we're good to go. So we confirm and send, push the order through, double check the chart. You'll find your stop and target in those bubbles right there. Now, one really cool thing about Thinkorswim is if you ever want to move them, just grab them, move it. When you drop it, you can send it again. It will put it to the new location. So if your trade management justifies a movement, you can always do it that way. Now, that's probably a good one to end on. We won't go through all of them. Give you a good idea on how to approach a simple stock, trading portfolio. One thing that you should be asking yourself is how many trades can I manage, And once you get out, you need to journal that trade. But today was kind of like, let's jump in there, let's do some practice together so you can see how to interpret numbers and think about it correctly. Okay, guys, this has been Tim and Coach T. Enjoy it. Hopefully you learned something. If you did enjoy the video, put something in the comments section. I got to tell you, I don't have a big ego or any really a lot of times. Good, bad, or indifferent. I like communication. I want to hear from you. So if there's something you need some clarity on, put it down there. If you enjoyed it, say thanks. If not, probably check out some, frogs dancing or something that might entertain you more than what I just did. All right, guys, get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.